Very good morning to this beautiful morning. Yeah, I woke up already like 2 hours or 3 hours ago, went to the gym, and now waiting for the markets to open. And as yesterday predicted, if you watched my live stream, I said that, this crazy movements usually followed by small relief rallies. Okay, so as we said, the 10-year bond was one of the main reasons why the stock market went so much down yesterday. 2% the S&P 500, 2 point something the Nasdaq, and so on. Dow futures also minus 1%. So you could see that there's real fear in the market, at least for the 8 hours or 6 hours the stock market is open, right? Make sure to follow me also on Instagram, where I'm posting much content to exactly those things. Sometimes I'm posting how much I made on those relief trades, and I'm working on something to let you participate on exactly those. But I don't want to jinx anything, so that's why I will not say anything more. But let's dive in. So you can see here that we have the S&P futures plus 0.56%. Dow futures also up 0.6%, as well as Nasdaq futures, the Russells. Here another big factor, the crude oil went a little bit down as of this morning, which also gives the market a little bit of relief that it's good. Don't go so much fast. It's not about that it goes up, right? I mean, it's normal economic work that, for example, the bond yield, right, which is today, let us see, a neutral. The bond yield is neutral, and usually, what you need to know about the bond yield is, this is the bonds of the government, very safe haven for lots and lots of money. Okay, there's institutions that say, we want to invest in the 10-year bond, and if people want to invest in it because they see on other equities a little bit too much risk or anything, then they go to bonds, and bonds gets more attractive, and therefore the yields goes down, right? But if not so many people are buying those bonds because they see other stocks and equities more lucrative, then obviously not so many people buy the bonds on institutions, and then the yields go up to advertise or to give more kind of a reason that you can buy those bonds, right? So bonds, demand and the yield is always contrary, so it's always the opposite. Okay, so more request, more demand for bonds, less yield, and as more the yield goes up, as more people are thinking that the economy is recovering because more people invest into the stocks. Okay, makes sense, and makes sense also when we see a nice recovery into the economy, which we want to see, right? We want to see stocks going further up because companies doing well. Now there's the Q3 earnings and so on, so it could be a little bit challenging what is coming up. But however, this is the market mechanics, okay? And I want to show you something else, because if we are going into, you have seen maybe this kind of headlines, okay? Nasdaq post worst day since March as treasury yield jump, okay? And if you're thinking, this was yesterday my thinking, if you're thinking about the worst days, okay, what's happening after the worst and best days? Let's just have a look, because while history doesn't repeat itself, it's surely a nice guide to see what's going on. Okay, so here you can see that the largest daily changes in the Dow Jones Industrial Average. You can see here that here's, for example, largest daily percentage losses. So here 87, when the stock market went down 22%, which is crazy. But however, I want to show you one thing. If you having this kind of moves, then usually you have the next day, for example, already one of the best moves, or other way around. So for example, here on the 13th of October, we had a plus of 11%, while we had 2 days later the worst day, or one of the worst days, with -7. Okay, here as well, one of the worst days, the 9th of March, and I'm sure we can see here 24th of March was already one of the best days. Okay, so you can see here that this is, or here 13th of March also one of the best days. Okay, top 11. So you can see here that this is going hand in hand, and I think that this big moves in one day always should be, you should be careful, but you always can, kind of bet already, and there's some nice product, also a little bit leverage, that can make you much profit. I expect that I made on my trade yesterday, which I will post on Instagram, so make sure to follow me there. I will, I assume I made at least 10-15%, and depending how much your investments are, this is very nice. Okay, so let's have a look further. The last this morning is economy calendar, and guys, the yields and oil crisis, I will go into very depth into today's vlog, so make sure to watch later on, and be subscribed and ring the bell to get notified when this vlog will come out. Okay, so here we have the economic calendar, which is summary what will happen around the world. German import index, a little bit of mortgage data, a little bit of MBA purchase index, and so on. And here you can see, you can go on investing.com or just Google it, and then you can see which events are a little bit, let's say, important, right? And you will have, let me see, I want to filter that, just the 3 stars, and if we apply that, you can see that the most important things are, for example, the Fed Chair Powell speaks, which could give a little bit of backup for the overall market. Bank of England, Bailey speaks as well. Crude oil inventories for sure interesting because of the current situation with the crude oil. So all in all, and also the manufacturing PMI September could be interesting from China. So you can see here, this is always to understand the overall market, right? From the news side, I mean, I haven't seen anything breathtaking. I think there's some Evergrande, kind of developments. They're trying, obviously, now everything to put in some kind of money, right, on the table. And here you can see Evergrande has a lot of assets, the properties and so on. So here, for example, they just announced that they will sell a 1.5 billion stake in Chinese bank as it faces another bond interest payment, I think end of this week, 29th of September, which is today. So interesting. Let's see if they do this. Obviously, this kind of data is sometimes a little bit hard to get because it's Chinese and so on, but anyway. So that's pretty much it. Let me know what you think about the market. Let me know where you are watching from, and I see you later on for the daily vlog. Don't forget to follow me on Instagram as well, and I see you later on. I will go now to the pool, and hope you have the best day in September.